Hello. Despite a choppy start to the week, oil, gas and electricity prices have all closed lower week on week. So let's see what's been driving the prices down. Monday's session was relatively quiet for Brent and the contract closed up by just 8 cents day on day. Prices rose on Tuesday, although the upward movement was short-lived. Tweets from President Trump calling for OPEC to increase production after the US announced it would be ending sanction waivers for all Iranian oil buyers. Trump tweeted that Saudi Arabia and others in OPEC will more than make up the oil flow difference. Brent fell just over $1 per barrel on Wednesday and then continued to decline on Thursday. The weekly EIA report showed an increase in stocks and also reports of production reaching record highs. Prices fell close to near the $70 per barrel mark. That's down $1.8 per barrel compared to last Friday.
Near-term contracts rose on Monday as demand rose. Increased global buying activity for LNG also pressured prices higher. However, by the afternoon, most curve contracts gave up their earlier gains and closed the day flat. Prices then fell on Tuesday thanks to the wider fuels market. Carbon and coal prices traded lower for most of the day. Adding to the bearish sentiment was news that storage levels were up 15% compared to 2 weeks ago, and healthy supply fundamentals pressured prompt prices lower on Wednesday, whilst the curve contracts once again took their direction from oil, carbon and coal. Coal settled below the $70 tonne mark for the first time in several weeks. Prompt and near-term contracts were pushed higher on Thursday as demand increased. Forecasts from the National Grid suggested demand could reach up to 50% above the seasonal norm. Last night, near-term contracts closed higher than last Friday, whilst longer-dated contracts closed lower. Summer 20 was down 3 pence per firm.
It was a mixed day on Monday for power prices. Near-term contracts posted gains as wind generation forecasts were revised lower, whereas curve contracts tracked coal prices lower. Lower renewable output drove prompt prices higher on Tuesday, and curve contracts ignored the bullish prompt and took their direction from falling gas, carbon and coal. It was then another bearish day for power prices on Wednesday, which continued into Thursday's session. Last night, all curve contracts closed lower than last Friday, with Winter 19 losing £3.4 per megawatt hour. You can download the full version of this report from our website. Thank you for watching. We'll see you next week.